Hello, traders, and welcome to the Friday wrap-up. I'll just knock that down a little bit. There we go. Welcome to the Friday wrap-up of January 8th, 2016. And yes, it is on a Friday. NFP Friday. The numbers came out quite surprisingly. I think it was at 292, and they were expecting, what were they expecting? 210 or 217 or something like that. So really good NFP numbers come out. We'll get to that in just a moment. Trying to get to my screen. There we go. Okay, great stuff. Traders, great to be with you. No, this is not Friday. Actually, to be honest with you, it's my Sunday morning. So it is currently 2:23 a.m. on Wall Street on a Sunday morning, and it's 14:23 hours in Bangkok, Thailand. Traders, great to be with you. Remember, this is brought to you through FXCL Excellence in Trading. All right, traders, let me introduce myself to you. My name is William Gilday, and I'm your moderator for the Friday wrap-up. And basically what we do here is we're going to take a look at some daily charts. And all I'm looking at is price action. That's all we're looking at here. We're not looking for trade plans or anything like that. This is like really, it's supposed to be a quick video, but it never ends up a quick video. But we'll try to make it quick because it is the weekend. But the purpose of it is that I'm really trying to get traders educated and motivated to look at higher time frames. I don't care if you trade a 15-minute chart or a 5-minute chart. That's great. But look at your hourlies and your 4-hourly charts or your daily charts. Look at higher time frames. Get a lot of information out of that, and it really can help you along with your trading when you're looking at direction and where you're heading and what's going on. Okay, so that's what we're going to do there. I'm not going to read this all off. I'll just let you know that the U.S., the Dow was down, the S&P was down, the Nasdaq down, small cap 2000 in the red. Let's take a look at London. DAX in the red, FTSE in the red, CAC 40 in the red, Eurostoxx 50 in the red. Wow, a lot of people in the red. Ooh, that's not a good thing. And if we take a look at Asia, Nikkei 225 ended up in the red. The S&P ASX 200 out of Australia ended up in the red. China 850 in the green. The Hang Seng out of Hong Kong in the green. And the Kospi out of Seoul in the green. Just let's take a peek real quick here and see what's coming out. We've got some, I have never heard of this before, but it's building consents out of New Zealand when Asia opens really early in the morning. My time, it's actually 4:45 a.m. I will not be around for that, my friends. Other than that, it looks like a pretty slow Monday. Actually, it's a really slow Monday. There's like, everything is low impact. With one housing starts out of Canada an hour and 15 minutes before the U.S. Open. So not a lot of data for tomorrow. Just to keep you updated on what's going on in our calendar. So that's what's going on that side of the front. And just let me see what the heck this is all about here. I can't blame anybody today. It is Sunday. People are allowed to call me on Sunday. Everybody knows what time I do my videos and what time I do my live trading room and all that stuff. And do you think they not call me? No, they call me. They don't care. They don't care what I'm doing. All right, so how do I trade? I trade by listening to fundamentals. I don't trade fundamentals. What does that mean? That means if, say, a rate hike or rate decision is done out of Australia, I will not trade that announcement. I will wait probably 30 to 40 minutes, make sure everything is lined up, and then I will enter into the trade. I don't trade that initial number. I'm a technician. I love charts. I like looking at price action. I like looking at candlestick formations. I like looking at price structure. I like looking at Fibonacci. I do use two indicators. I'll be honest with you. I do use two indicators. One is harmonics. And you say, you use harmonics? Yes, I use harmonics. Why do I use harmonics? What are harmonic figures made from? In other words, a crab, a butterfly, a bat. What are they made of? Fibonacci numbers. So why not look at them? I love Fibonacci numbers. I use fibs on everything. So yes, I do look at harmonics. The other one is Ichimoku clouds. Ichimoku clouds are great because there's only one line on that whole indicator. That is a lagging indicator. All the other indicators are giving you of what they're expecting in front of current price. I think that's pretty cool. And the cloud, which is the most important part, is great support and resistance. So, if you're going into a thick cloud, a big cloud, you got something to think about and protect your position. Whereas if it's a small cloud, it'll probably go right through the cloud and you won't even know it's there. So just a little bit about how I trade and what I do. Let's get the legal stuff out of the way. Even on a weekend, Forex trading has a large potential rewards, but also a large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Traders, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get a start on the euro dollar. Now, you want to talk about a bumpy ride here, huh? Up, down, all around, right? Euros up, euros down. And this is, I call this Forex jump, right? There is no mode here. This is no, there's nothing. If you're going to trade this, and if you look at this chart spatially, it's in a downtrend. All I want to do is I want to sell the euro dollar. However, you get a day like Thursday, and Friday, right? But Thursday, you got that big blue candle. That thing moved over 100 pips on Thursday throughout the day. But remember, this is a daily chart. So what you're seeing is you're not seeing the pullbacks of 80 pips or 70 pips like you would on a 30-minute chart or an hourly chart or a 15-minute chart, right? But this chart just gives you an idea of where price is and what's going on. And of course, the NFP numbers came out real good. In fact, hourly earnings came out good. I mean, unemployment stayed at 5%. I mean, the numbers couldn't have come out any better. Very good numbers on Friday out of the U.S. on NFP. Well, let's look at this counterpart, and that's the dollar Swiss. Not much going on with the dollar Swiss. Basically whipsawed the NFP numbers, and here we sit. This is the close on Friday. I don't trade the dollar Swiss. I'd rather just trade the euro dollar myself. However, I will trade the Swissy on other pairs, like, the Aussie Swiss, the New Zealand Swiss. On other pairs I'll trade the Swiss, but on as far as the dollar Swiss, I don't trade it. I'd rather trade the euro. Okay. Now take a look at this. Don't you wish you were in this about 2 months ago, a month and a half ago? I went on vacation, came home, and opened up the chart and saw that. Yeah, absolutely beautiful. Pound dollar is it's dumping. It's just absolutely dumping. It's so weak. Now, if you went back and looked at a 1 hour chart, you wouldn't see that. Okay, you would not see what you were seeing, and this is like a waterfall, just totally dumped, right? So this came down, and you can't see my cursor, but you can see that this goes sideways, right? It goes sideways. What does it do? It shows you a doji. What happens after the doji? This is probably the start of a new market, and what happens? Boom, continues to the downside. Now we got a golfing bearish candle, and what do I expect is going to happen on Monday in Asia? It's going to continue, or these people on Friday are going to take all their profits and we're going to get a blue candle to the upside. So, but what's my bias? What is my bias for the week? My bias for the week, my friends, is I want to sell the pound dollar. There's nothing here that tells me, oh, let's go buy the pound. No. Now, if you're a counter trend trader and have some experience on counter trend trading, I have no objection to doing that. I think it's a great thing, and it does work. All right. Wow, now I got one that I don't know what I got. Folks, I don't know what this is. I forgot. I don't know. This looks like the dollar yen. That's exactly what this is. This is the dollar yen. And you can see the dollar is so strong, and it's been strong for some time, and it continues to be strong. And if it takes out this low here, take a look left of the chart, this big candle with this big wick. If this takes out this low here, this thing is just gonna dive. The yen is just gonna dive, and the yen is gonna get so strong. And just be careful when you start hearing Abby and Kuroda speaking like every day. Get ready; they're gonna do something. Okay, let's take a look at the CAD yen. It's another pair that I don't trade, but I know that the yen is stronger than the CAD. And like I said, this is one of these offshot pairs where if you wanted to trade something different, you can trade this CAD yen and look at this trade. Wow, if you took this and you trend line this back here, just put a trend line up here, took a break of that trend line, you got in about here, maybe here, and you're in. and you got a month's worth of trades that actually this week you got a little nervous. Who cares? You're in probably over 100 pips profit already, and it just keeps going to the downside. The yen just keeps getting stronger. And a pair that I do trade and I enjoy trading, that's the pound yen. A friend of mine made 800 pips in 2.5 weeks trading the pound yen. So he's done very well with the pound yen. It's been very good to him. But again, what are we going to take from this? We're far away from the 200 exponential moving average. This thing is nosediving. The yen is strong. The pound is weak. And just realize that when you go into next week, how this affects our trading for next week and our bias. When you go in front of your charts on whether it's Sunday night if you're in the East, in the U.S., in the East on Wall Street, or if you're in Thailand and it's 6 o'clock in the morning, 7 o'clock in the morning, you're ready for this and you expect that we're either going to get a pullback on profit taking, because I don't trade the daily chart. I wish I had the equity to trade the daily chart. You need some good equity to trade the daily chart, right? So I wish I would trade the daily chart, but I don't. I trade a 30-minute or 1 hour chart. I do most of my analysis on a daily chart, a 4-hour chart, and 1 hour chart. Okay, but most of my entries on a 30-minute chart. And it allows me to lower my lot size and move my stop loss a little bit bigger to give it more room to breathe and give me more of a probability of being successful in my trade. Let's take a look at the Aussie CAD. Pretty interesting here. This Aussie we know is a commodity pair, so it really reacts to everything that's going on. And this is pretty well sideways for now. This is like 2 weeks now, coming on sideways price action. So, if I was going to trade the Aussie CAD, right, and I saw this chart, the first thing I'd say is, well, number one, we're at support, and I'm expecting a pullback. So I would fib this. I would fib this whole chart and see what the heck is going on, and I would work the fibs on a counter trend trade. But as I like counter trend trading, I don't mind it. I'd rather trade it to the downside. But the Aussie CAD is not on my list, and it's not part of my 8 pairs that I look at on a regular basis. So I trade any pair, don't get me wrong, but I do have a workspace where I have 8 pairs that I watch all the time, all day long. They even have some EMAs on the chart. Can you believe it? And an Ichimoku cloud. So yeah, depending on what I'm trading depends on what is on my charts, folks. Forex, I will tell you, during London and the opening of New York, I do use harmonics on my Forex charts. My other instrument that I trade in the New York session, I use Ichimoku clouds. So basically during the day, I am using harmonics and price action and price structure. Most of my charts look like the chart you have in front of you, except for 3 EMAs. And one is on there already, and that's a 200. I put a 55, and I put a 21, and sometimes I'll put a 10. I like putting a 10 EMA when I'm looking at higher time frames. That's like an hour and above. I love throwing a 10 EMA on there. Okay? All right, here's an Aussie yen, a pair I trade regularly, and again, just look at how strong this yen is across the board. The next chart's going to be the same, right? And just now you know this. So when we look into Monday, Tuesday, Wednesday, we know I expect to pull back. We're at support. If this breaks support, this is just going to dump. It's going to dive. Okay. If we get a blue candle, we're going to get profit taken, and probably Monday's going to be a pretty boring day. I expect a boring day on Monday. I don't expect a lot of price action on Monday. Why? There's no data. There's nothing to move this stuff. People are going to react from Friday's NFP. Remember, Asia is closed when that NFP data came out. So all of Asia hasn't traded NFP yet. So that's going to be interesting to watch. All right, let's take a look at the Swiss yen. It's a great pair to trade. Also, the Swiss is so weak and the yen is so strong. If you look at this, spatially, this is a downtrend. You're far away from the 200 exponential moving average. It's already done its pullback. And Friday gave us a little down candle. It doesn't react really much to NFP numbers. However, it is heading to the downside, and if I was going to trade this, I'd be looking to sell this. So what would I do? I would fib this current swing, I'd look for like the 38.2 or the 23.6 fib, and I'd put a pending order in and take it from there. Or if I knew I was going to be sitting in front of my charts, I'd stick an alarm on my chart, and it would go to my phone. It would also send off an alert, and that'd be it. And I'd go on with my life. That's the nice thing about technology today, folks. I don't care what platform you're trading. You can put it on an iPad, an iPhone, Samsung's Android phone. You put on any phone. You can travel and trade. Once you're in your trade, it's all about trade management, right? Trade's already started. Now you just have to manage it, and you can do that on the run. You don't have to be in front of your desk. Even though I enjoy being in front of my desk, I enjoy looking at my big screens and my charts. All right, let's look at the New Zealand yen. Again, same thing. The Kiwi's been weak for a long, long time. We've known that. This is not a surprise. So we talked about this last week. All you want to do is sell the Kiwi, right? I just want to sell the Kiwi. I don't care what pair structure you put it with. I just want to sell the Kiwi. Actually, I'm starting to get away from the Kiwi dollar. Because of the situation with what's going on with the dollar. But, world news is getting pretty interesting now. That we got Saudi and Iran fighting now, and all this stuff's starting to come out, and, it's getting kind of messy out there. So I'm a little bit more cautious on some of these pairs. But this just looks like a great pair to know going into next week that the New Zealand yen, we want to sell this. So, smaller time frame, look for the pullback. All right, let's take a look at, again, the New Zealand dollar, which we looked at already. And I think this is the last one of the day. And that is gold. Everybody's been talking about gold. I should have fibbed this for you all. Folks, this is not a bullish chart, okay? This is not a bullish chart. I had a couple of up days, big deal. It's at 1100, big deal. This is like not going anywhere, all right? It's it's gold. It's going back down to $1,000 an ounce, and probably 900. And I wouldn't even be surprised if it went down to 800. I've been saying that for a year, and it hasn't done it yet. But it would not surprise me. But you have to realize that gold and oil mix together. Okay, so when you have oil dumping, gold is going to go up, and vice versa. But oil is very volatile. Now you got to remember, folks, if you trade the CL, which is the oil contracts, futures contract, every penny is worth $12.50. So if it moves 100 points, which is $1, you made $1,000, right? So that's why you see them get all excited when they see that it went from $36.40 to $36.80. Well, they're excited because that's a lot of money when people who have the big dogs who have 100 contracts, on oil going up, and it goes down 40 cents, right? So that's why you see them make a big deal when oil only moves 30 or 40 or 50 cents. And then when it moves $1, they really go fanatical, right? The media, the blogs, everybody, right, is talking about how oil's on the move. So that is why, because it's very, very lucrative if you're in the right direction. It's a bummer if you're in the wrong direction, but of course you have a stop, I'm guaranteeing. I would hope, but that's the way it is. Traders, great to talk to you on a Saturday. It's really Sunday for me in the afternoon. Actually, it's 14:42 hours in Bangkok, Thailand on a Sunday. That means it is 2:42 a.m. on Wall Street. All right, traders, on behalf of myself, William Gilday, and our great friends at FXCL. FXCL, Excellence in Trade. I want to thank you for joining me today for the Friday wrap-up, which we do every single Friday after the Friday close. Traders, have the great time for the rest of your weekend. Enjoy yourself. Have friends with family, friends, loved ones, even the guy driving the pickup truck going down the road. All right, my friends, we'll catch you on Monday for the market opening preview, which is done every single trading day, and that is put up before the London Open, and I record that during Asia, so it's up about 3 hours before London opens. All right, so it just gives you an idea of what we're looking at, and we look at 6 currency pairs. Take care, traders. Have a great trading day. Enjoy the rest of the weekend. We'll catch you next time. See you now. Bye-bye.